Hello everybody, in this video I'm going to be doing a brief stock analysis for Norwegian Cruise Lines, and this is not going to be any kind of deep dive into their financials, but more so me just giving my opinion on the company as well as the cruising industry. I like to start off by taking a look at the 5-year chart just so you can get a longer term growth perspective for the company, and as you can see they're down about 74% in the last 5 years. But because this industry has been so disruptive, it may actually be more useful to look at a shorter term chart. And the stock price is at about $16.50. It may be just a little bit different by the time you're seeing this video, but it actually has not been this low pre-COVID since before the stock's inception in 2013, which is pretty crazy and not something you see too often. But now taking a look at the 6-month chart, you can see that it's up almost 50% in the last 6 months, going from about $11 to about $16.50. And it ran up in June to about $27, and then it's kind of been a little bit dovish comparatively since then. Next up, taking a look at revenue and earnings year over year for the last 4 years, you actually see a really good picture here. Revenue increasing year over year for the last 4 years, as well as increasing earnings, which is definitely good to see. And then taking a look at the last 4 quarters, it's kind of a different story, which is as to be expected. You see decreasing revenue for the last 4 quarters, and what's really odd to me is that they saw a greater decrease in earnings from quarter 1 of 2020 to quarter 2 of 2020 because they were already or still operating as normal in quarter 1 of 2020, or for most of quarter 1, and then in quarter 2 of 2020 is really when they were shut down. So it's really odd to me that they were seeing a greater loss in earnings in quarter 1 than quarter 2. Let me know down below if you may know why. Next up, I'm going to look at a few points by the bulls and the bears right now from analysts and Morningstar. And the first one here is that lower fuel prices could help benefit the cost structure to a greater degree than initially expected. And although that's very true, one of their biggest costs is fuel, and fuel is at historically low prices right now. With their ships not currently operating, how much is that really helping them, and how much does that really matter right now? And I'd say really not much. And then the next point is Norwegian is relatively smaller than its peers, being Royal Caribbean and Carnival, so they're going to be able to deploy their assets more quickly, which is true to a certain degree, but if they're able to deploy their ships by another week or two, how much is that really going to help them in the long run? I'd say not much. And then on the flip side of that, Carnival and Royal Caribbean are in a much better spot to liquidate some of their assets. Carnival just sold 18 of their older ships a month ago, which has helped them out tremendously, and Norwegian is not in a spot to do that. And then this last positive point isn't a great one either, unfortunately. It's that Norwegian has capitalized on the leisure industry knowledge from prior sponsors, and I'm sure that helped them get started, but that's really not a great point for the matter at hand. And next up, I'm going to talk about some pretty gloomy points. The first one being that there's a lack of credit available for the cruise lines, which is going to help hurt them with financing for new ships and slowing capacity growth. And real quick, Carnival kind of has the biggest brand and the most ships, and they're in the best financial situation right now, and Royal Caribbean is still in the best growth perspective situation. So I really don't know what differentiates Norwegian that's really going to help them in the long run. Let me know down below if you think they have a big differentiating factor that is going to help them. And then the second point is also a good one to talk about. It's that COVID headwinds could persist longer than expected, which we've already seen a couple of times. I think the general consensus right now is that cruises are going to get back to normal or start operating again rather in January, but that could easily get pushed back to March if there is a small second wave of this thing. Even just a small wave in a few countries could really hurt their business. And then the last one is that there's a weakness in consumer spending, which could have lingering effects for years. And it's really going to hurt their bottom line. And lastly, I just wanted to show their research report overview. They were getting about 4 out of 5 stars, which I was actually pretty surprised about just because the uncertainty is so high for the cruise industry. But I think that's partially because they were given a fair value of $25, and the stock is still at a pretty low, as we saw at about $16.50. No economic moat, as I kind of already talked about. Again, please let me know what kind of differentiates them and gives them a bigger advantage over their peers. And then standard stewardship, don't know much about their top management, to be honest. If you did enjoy the video, leave a like down below, and I make a ton of other brief stock analysis videos just like this one, so be sure to come and check it out. Subscribe for more content, and thank you so much for watching to the very end.